Lou Basenese, founder and chief analyst of Disruptive Tech Research, joins us now. Good morning, Lou.
Good morning, Tracy.
And so I want to talk first, though, about Amazon. Looking at that yesterday, we saw profitability up. What do you think this is credited to?
Look, I think Amazon's unstoppable right now, and I think the profitability up is credited to something that few investors realize, and that its core business is very diversified. I mean, you look at the one stat that stands out to me is not the profitability, but the fact that only 51% of Amazon's sales came from its core online sales. I think everyone assumes that 90+% comes from the traditional core platform, but it's really coming from AWS, which was up 49% in the last year, their cloud storage business. And then more impressively is the new advertising segment. It was up 132% revenues there to top over $2 billion for the first time. That's really an untapped growth market for Amazon, and it's got a unique advantage there where it's serving up ads on the same platform where users can buy those products that they're seeing ads for. So just a unique advantage for them.
And now I want to get to Twitter. The company surprised everyone by posting its second quarter consecutive profitable quarter last year, second profitable quarter in the company's history. Will Twitter do it again? What can we expect today?
Yeah, not sure if Twitter will do it again. I certainly owe Jack Dorsey an apology. I've been dogging him for years about being a recycled leader and two-timing, working at two different companies. But look, I got to give him credit here recently. He's made a swift and meaningful response to the spam and privacy issues. He's started to reignite user growth. Twitter's profitable. If they can do that again, if he can demonstrate that this is sustainable, I think the stock's going to make a big move. And either way, Twitter is one of the most volatile stocks on earnings reports. So a few hours from now, we should expect to see the stock moving sharply one way or the other.
Maybe send him a tweet.
Yeah, maybe.
Okay, so we've got to get to Facebook. Historic day yesterday, but not in a good way. The losses erased about $100 billion in value from the company, biggest single-day decline in market cap ever. Can Facebook recover? Is it that bad?
Yes, they can recover, but welcome to the social media penalty box, Mr. Zuckerberg. If you want to know how long you're going to be here, go call Mr. Dorsey, because it could be for a while. And I think, look, the last time we talked about Facebook was on the heels of Cambridge Analytica, and I said this too shall pass, and it did. I mean, the stock recovered within 2 months and then some, but I'm afraid that this is going to persist. And I think there's a few data points here that can convince us of that. The first one, and first and foremost, is insiders have been bailing on the stock since Cambridge Analytica broke. I mean, you've seen over $4 billion in sales, which is equal to the entirety of sales of last year. So clearly, they knew it was going to get worse. We got the confirmation yesterday in that the sales growth is going to decline, user growth is going to decline, expenses are going to be up. I really think this is troubling for Facebook. The one saving grace is that they've somehow managed to get every human that owns a device onto their platform, so they offer advertisers a scale that they can't easily replace or get anywhere else. So, there's going to be some grace for Zuckerberg to turn this around, to keep advertisers' attention, and to really regain the trust of users, because I think that's first and foremost what's necessary.
Yes, it is. All right. Thank you, Lou.
Thank you.
Good stuff. Regaining